Hello, ladies and gentlemen. It's Wednesday. It's IBM TV program Modern Investing. My name is Sasha, and I would like to introduce our guest, Peter Bennett, graduate from New York University and a Wall Street professional. How are you today, Peter?
Okay, Sasha, how's everything?
Okay, everything is all right, could be better. However, the market is becoming very complicated with the drops of 900
Mm-hmm.
points one day,
Yeah.
then going higher, then going down again. Now it's recovering today. So, what I feel is that, as you know, the major CEOs of the largest corporations selling their shares in large numbers. So Jeff Bezos and people from Google and Elon Musk and many others actually they're selling in the last few couple of days. They sold on to altogether $67 billion worth of shares.
Mm.
Uh, but however, for example, Amazon is still going higher despite of large
Yeah.
set. Well, Amazon is Amazon. What can I say? There are a few stocks that defy all all logics. For example, which is good. Apple, Nvidia, and there is a handful of stocks, and sometimes. You're coming almost to a proposition that to own high yielding dividend stocks and just Apple, Nvidia, and Amazon. And probably this is all what you need. I don't know why would you have anything else. What do you think, Peter?
Well, a lot of things through what you said. First of all, my view of the market's starting to change. I mean, I've been talking about inflation for a while on this show,
Yes.
and there's the market's been very volatile now, and it's not that far off the highs, really, when you look at it. But
Yeah.
there was fear of the Omicron virus, which is overdone, most likely, because the doctor who discovered in South Africa said his patients had very mild symptoms. And I've already heard from some other doctors on news shows. They were saying that it seems to be more transmissible than COVID, but less transmissible than the Delta, from what they think. And everybody's saying it's probably mild symptoms, like a little cough, you don't lose your taste. So it's like we're going to have a lot of variants and probably an overreaction to that news, but it was also Friday when we heard it. Then the tax proposal is hopefully dead, probably mostly dead. I mean, the first one went through, but the problem is inflation and stagflation. It just now, Fed Chair Powell is figuring out, he's saying, well, maybe we better not say transitory anymore, and he's saying, well, it may last through the beginning of 22, the first half of 22. It's like, yeah, it's December. Big, really, what a risky call, that he's right in front of him. He said, yeah, it may last. Well, that I think it's going to last much longer, and that's why I got more defensive when we get to the dividend stocks. I'll tell you, I sold a bunch of dividend stocks and I repositioned. I think you need to be in energy because I think that's where the huge inflation is coming. Consumer staples because it's defensive. Tech, you just mentioned Amazon, and that's I sold puts on Amazon for 23. I love Amazon, and I'll talk
Absolutely.
about that when we get to options. And also, some REITs will work out well in an inflationary environment. But the worst thing is the Fed is now caught between a rock and a hard place because they're stimulating the environment. They need to stimulate it. Plus, Medicare is going to go into deficit in 2026, which is just around the corner. And they cannot afford to pay interest on that gigantic debt. That alone could cause a lot of inflation because a lot of money is going to have to be pumped into the economy. It's 100
Yes,
trillion or
yes.
200 trillion of debt, and nobody's even talking about it hardly ever. It's incredible that they're missing it. So I go to, first of all, I mentioned this last show 2 weeks ago. If you look at the 1970s, what happened is there was massive inflation. I mean, we're talking about treasury rates at 15, 16%, huge inflation. And the conditions were one, a Fed that was willing to take inflation in order to reduce unemployment. Well, it sounds a lot like our Fed today. They're trying to stimulate the economy. They don't want to. They're a little too political. Whatever reasons they have. Two, government spending on new social programs and the Vietnam War. Well, what do we have today? We have huge government spending on social programs and a Medicare deficit that is dwarfs everything. I mean, it's monumental. Literally 100 or 200 trillion off the books, and it's coming soon. Three, an oil embargo we had, and I'm going to talk about energy in a minute, but that's one of the places where it's going to happen. So that's how we got huge inflation. And that sounds a lot like today, just slightly varied. So with energy, first of all you have to know is USAC in their talk said that energy companies are spending 40% less capex than they need to maintain current levels. In other words, they're paying back money in dividends to their shareholders. They're buying back shares, and they're saying we're not going to over invest if possibly in 10 or 20 years or whatever these people are out to replace us. And plus, there's probably a psychological aspect to it. They're not appreciated. It's like, oh, everybody's criticizing them. So, okay, let's find out what happens when oil goes to $7 a barrel, gallon. So it could easily keep going much higher. B of A said 120 a barrel. I wouldn't be surprised to see 150 or even higher, and it's not going to be good. So, by the way, before I leave energy, I have to say Biden. So what does he do? He always takes the political answers. He very rarely gets it right, but he always does it. So he releases 50 million. He goes with a bunch of other countries, maybe 4 or 5, and he gets everybody to release 50 million barrels of oil, which is only half a day. First of all,
Absolutely.
second of all, it has to be replaced. Third of all, it's terrible timing because OPEC's about to meet and say whether they're going to keep their increased goals or even reduce it. And their meeting, I think, is this week, and he does it last week. It's like just because he wants his poll numbers to move, maybe, but it's the worst timing in the world. If he thought about it, it's like right before an OPEC meeting, I'm going to do this. So this oil has to all be replaced. By the way, as a footnote, I like Trump. I don't love him on everything for sure, but he was buying oil at $42 barrel, I guess. And the Democrats were saying, "Oh, we don't want you to buy it." Now Biden's selling it when it's and depleting the reserves again, and we may have to buy it at a much higher price. OPEC is not going to want, and Russia are not going to want it to go down. So let me focus on this. This is why I'm really scared about inflation coming, and this could hurt the market a lot. One, housing prices are up 20% this year, and they're forecast to go up 16%. Well, rents lag home prices by 1 to 6 months. So this increase in house prices is going to wind up being a huge increase in rent for people.
Absolutely.
And that's going to cause a big strain on the consumer. Two, natural gas prices are up 30% and oil is up 50%. So people are spending now for Christmas, maybe with cards or whatever, but that's going to hurt the consumer again a lot when they have to pay the gas tanks, and especially when they're heating their homes. That's going to cost a lot more, or cooling their homes later. Three, labor. There's still labor shortages, and in 5 or 10 years, robots are going to replace a lot of these jobs. But right now, they've overpaid people with stimulus, and people are like, I have a lot of money at home, or I'm trading Bitcoin or whatever, and I don't need to work right now. So there's shortages of labor, but mainly energy again. So, and the only good news is the supply chain. By the way, it's starting to ease up a little bit. There was, I forgot the exact numbers now, but it was 86 ships were last month in LA, and now it's down to 79. So at least they're starting to unload the ships a little faster. They've sped that up. But when you look at it now, I mean, I'm getting very defensive because look, the upside, the values are so high now. Dividend stocks too, and that's why I sold some of them, because you look nice profits, but now you take a perfect example, CPT, my favorite apartment REIT. It went up a ton. I bought it at 3% maybe a year ago dividend. Now it's two. I'm going two. It takes if it doesn't increase its dividend a lot, it could take 50 years to get my money back. And that doesn't seem good, even if it increases. So I held on to some of it, but I reduced it. But I'm to 0.5%. But that's an example of where you're saying, you know what, the risk is starting to outweigh the reward. And I'm not selling dividend stocks. I'm still have the options positions, but it's getting scary because 22 could be a very scary year for the market. What do you
Yeah,
think?
I agree with you. I I totally agree with everything what you just said. I can't figure out of dividend stocks. Let's see if I would sell to replace it with what? Okay,
I
so
know. I know.
with what? Just
I,
sitting on cash?
well,
Oh,
that's the problem. Now I'm over 10% cash again. But you know what? The only thing is, if interest rates really do start climbing next year, then there
it's
might be a chance, or in maybe for 2 years, at some point, maybe you can lock in another 2 or 3% yield on a bond, which isn't great, but at least it's protected. Where these stocks, they could get smashed if the Fed is in bad shape here. They're stuck because they can't. If they raise rates, it's going to hurt the economy. It's going to hurt housing prices. It's going to hurt everything, and it's so low. But so they're almost stuck at zero plus the coming debt in 26. But the other side is how are they going to fight inflation? They have to raise rates, and so they're cutting. They're doing tapering now, and they're talking about, okay, later we'll do inflation. They're very reluctant to do it. And what's interesting too is that they've been. I read this that they've been controlling like short-term rates, and down the 10 year is very low, but the 30 year hasn't really changed that much, and so they probably can't influence that much. But it's dicey. It's really, I mean, the upside now in the market seems like it's probably low, and the downside right now seems flat. And I haven't been felt that way for years. Now I'm not selling my dividends, most of my dividend stocks. I have dividend stocks that are yielding mostly from 3 to 16, 14%. And I view them as businesses. I told my friend Bud this, that you can't look at this. If it's a business and it's generating income or dividends, you can't look at it as a stock that goes up and down and worry about it. If I bought a business, let's say I bought a dry cleaners or a car wash or whatever, if it's generating cash, I'm not worrying about what I could sell it for every week. But
yeah,
those
exactly.
non-dividend stocks, then you have to worry a little more because then it's not generating the cash and you have to depend on capital appreciation. So that's why I like dividend stocks again. Plus, they outperform
Absolutely.
anyway. As
For
far
example,
as
one of my dividend stocks, I don't call it high yield dividend stock anymore, is a
I know,
Pfizer because Pfizer moved up considerably and it's yielding now hardly maybe 3%, and it will
I
continue.
know. It was 5.
It was 5, and now
Yeah.
it will go below 3. So it's okay. It's still dividend stock, but Pfizer is a different story. It's kind of one of a kind story.
Yeah, it's a great company.
It's a strong, great company, well-managed company with a lot, many patents and products, and yet it also has upside of the coronavirus business.
Yeah,
Uh,
you know what? I happened to see in Morningstar today. I didn't read the whole article yet, but Morningstar just sent something over, which is, something I get a subscription to
mhm.
for free, actually, from TD Ameritrade. And they said they just reduced their Pfizer. They said because of the valuation, they're not selling it all, but I don't know what they're saying, sell half, whatever. But they're saying it's so high, and that's what's happening. A lot of these stocks are like, wait a minute, I'm getting, so 3%. If they don't increase, again, they could easily increase the dividend. I haven't looked at their growth story and
Absolutely.
what's come, but 3%. It takes you 35 years to get your money back if they don't increase the dividend. Now, if they increase the dividend, that's different. But I'm just saying, at 5, you say, okay, that's not bad. I get my money back in 20 years if they don't increase the dividend. If they increase it,
But
that's even better.
there are two factors in these stocks. For example,
Yeah.
look at Mastercard. Mastercard is buying back a lot of shares. I don't remember 11 million shares. No,
Oh
probably.
yeah. Well, that's a different way you make money here.
But yeah, exactly. But it's correlated because the less shares you have outstanding, then of course you can easily increase dividends by paying essentially the same amount of money divided by much lesser number of outstanding shares. So you can easily increase your dividend without
Oh
actually
yeah.
more money.
No, I like that. I mean, MPLX is buying back shares as well as paying dividends.
MPLX,
But you know
absolutely.
what? I've read that, I mean, different people have different views of that buying back shares because some people say, well, you don't have any place better like to invest. You're not, to grow your business. Instead, you're just buying back the shares. So it's like,
Maybe not.
but
Maybe
well,
not.
yeah, it can still work if you have the cash flow and you
If
buy
your
it back.
company, if your
Then it
company
really
is
says
doing
your stock is
well,
un, it says
yeah,
your stock is undervalued. So if you believe your stock is undervalued, it can work. But it's not the same as saying, okay, we're going to double our business, because we can reinvest. We can go out and or make an acquisition that'll be. But it definitely works sometimes because when you have an undervalued stock. So because
I
now,
think it all depends on industry and
yeah,
sometimes
well, it depends on cash flow too. Yeah,
absolutely.
yeah,
But
yeah.
if your
So
cash flow allows you to buy back shares,
yeah,
and subsequently it always will lead on, provided that your business is still just as good, you will increase automatically. You will increase dividends simply because you have the same amount of cash spread over much lesser shares outstanding. So
right.
you,
Yeah, but I mean the
whether or
thing
not
is,
you will increase dividends.
no, no, no. It definitely can be a good strategy. The thing is, look, I, I don't think Mastercard pays a dividend or pays a very low one anyway.
Yeah, yeah. Mastercard, I wouldn't buy for dividends purposes.
Yeah,
Maybe
you
because
see, the thing is though, you know what? 20 years ago, 10 years ago, 30 years ago, whatever, 50 years ago, buying a stock and holding it might be a very safe feeling strategy to me because I might say, okay, this is a growing company. It's going to keep growing. It can, not even buy back shares, but it could do that too. But it's just
Mhm.
a safe growing company. Now we are in a world of change, and
Yes,
change is so rapid now. It's unbelievable the speed of how the markets go. And every time I look at an industry, I go, well, where's it going to be in 10 years? And a lot of industries, I'm not sure. That's another industry, finance. I stay away from finance for a lot of reasons. One, I stay away from the banks. Well, for two reasons. One, I still think there could be an office crisis coming, which could hurt them. But also, if interest rates go so low and the economy starts stagnating in a few years, which I think it will, once interest rates are low, then the banks may not do well at all because they do better with high rates. But even
absolutely.
MasterCard, you say, well, wait a minute. Will they be replaced by something else in the financial world?
Of
And
course.
now let me give you a perfect example because we were gonna talk about Amazon. So Amazon just cut Visa out. They're not taking Visa anymore. They're getting into fintech, so they're going to do their own credit card. Now, eventually, they make it broken. That might get broken up but still, they can turn around and do that. It's again the changing world. It's like so who knows who's going to be taking the payments in the future, or maybe the U.S. will put out a digital currency and
Yes,
people will use that more and MasterCard less. I don't know, but so that's why I was like a dividend. I mean, I like a few strategies, selling options on tech, but also and Delta too, but airlines, but I like a dividend because at least I'm getting my money back and I can watch it. If something goes wrong, I've gotten some of the cash out already or all of it. Ideally, so I can look at okay, this industry might be around for 20 years and I can get a lot out of that in the meantime. But if I'm getting zero out, then I have to say, okay, well, when do I sell? If it's changing world in 20 years, MasterCard will probably be around because they give the incentives, but maybe somebody else will come and say, okay, we're giving bigger incentive. Who knows? That's why I just don't feel solid with that as a basis compared to a nice, safe dividend stock like a Staple or another company with a model where they'd probably be in existence. But you have to ask everything this way. Interestingly, I also read something this week that I don't know if I have the numbers, but it's shocking. Like 20 years ago, 30 years ago, the S&P was fairly stable, and they said I forgot the exact numbers. I wish I'd have to find it, but it was something like 80 or 90% of the companies in the S&P uh, were still in the S&P like 10 years later, 15 years later, something like that. Very stable. Now they're saying, I think it was 10 years. They're saying, or 15, whatever it was. They're saying they're expecting one third of the S&P companies to be out of the S&P. things are moving that fast. So you say, okay, I have a great big company, they're gone. Oops, it's like, I mean, before it was maybe a weird case like Enron or Emside, which you don't expect, but now just because of change, who knows? Who knows where the drug industry will be? I mean, Medicare is proposing, Democrats are proposing to have Medicare dictate the prices to the drug companies. It's going to smash the drug companies. It'll also destroy innovation in drugs because they'll stop making new drugs. The rules are draconian, but I'm just saying, who knows with with uncertainties, government, tech, change, and a future where the biggest thing is the Medicare is going to be gigantic. I mean, the deficits, and I don't know how they're going to handle that, but it could have big impacts on everything.
We'll talk about it just in a second. We'll have short commercial break. Thank you. Okay, we are back. Actually, speaking about the medical calamity, actually, I don't know how else to call it. I never spent even a day in a hospital, so I never
Mm.
knew really what it is until, unfortunately, my wife had an accident last week. So she was in the hospital. I visited her every day, and I was surprised to see the facilities where she was. It was state-of-the-art $2 billion hospital, which opened just last June, just 4 months ago. Its equipment, its facilities, the separate rooms for each patient with a giant
Wow,
TV,
nice.
nice food, nice personnel, or so on. I mean, I thought that it would cost probably at least thousand, maybe $2,000 a day, and it could be. Of course, she had an operation.
Oh, it should be much more than that.
It should be much more reserved, except that I don't know real prices because it's
But
all
this is Canada, right? So
in Canada.
the
It's all
government is
for
paying
free. Well, it's not really for free. I should rephrase it. Okay, it's paid by Ontario
taxpayers.
Health Insurance Plan, and Ontario government spends 1/3 of its budget is spent on medicine. It's a lot of money. Trust
Yeah,
me.
no, a hospital stay in the U.S. can easily cost $10,000 a day, and that's
Could
not
do. Yeah.
that's if it's not serious. I mean, emergency care could be 20.
Hmm.
I mean, and that's not even counting the operation, or anything like that. The
Yeah.
operation, an
Depends on
operation
the
costs 30,000, 50,000, easy, easy. So,
yeah.
I mean,
So,
it's
so
another inflationary cost that's just
in
out of
Ontario
control.
system, it's a lot of people, of course, criticizing it, and it has its shortcomings. But overall, with my personal experience, what I've seen in the last few days, I think it works fabulously. It's kind of for people, by people, and maybe there are some improvements still could be probably suggested and
Yeah,
implemented.
well, I guess it
But
depends.
it
Maybe
was right.
Toronto's good. Did she have to wait for the care, or there was no problem?
No, no, she was
Oh,
brought by emergency, by ambulance.
oh,
She
because it
was
was
taken.
emergency. Yeah.
Yeah, because she fell, so it was emergency. But she was taken in right away.
Mhm.
She was put in emergency unit. She had private room there, right at
A
emergency.
private room is great. Most hospitals in America don't offer that. Some do, but
No, no, she was
that's
in a
good,
private room,
right?
and
Well,
then
you're lucky you're
same,
in a good area because I
yeah,
mean, I have a part-time health insurance business, and again, I heard a Canadian client this year telling me about how problems, just trying to get a doctor. They can wait. Sometimes if it's not a total emergency, they can wait 6 months, 9 months to see a
Yeah.
doctor for things that's, in the US, you'd see them that week. So there's still problems, in Canadian system, but
And
but
she
you know what? It's all area specific. I've had clients
probably,
occasionally who said, "Oh, I loved it. It was great," but the majority told me big problems. It's
I,
not where,
I
but
would
you're lucky.
like,
You're very lucky. Toronto, I guess,
yeah,
is, if you're in the right hospital, the right doctors,
yeah.
the right
And she was
situation.
transferred in her private room the same evening. Actually, I already left at
Right.
some 8 o'clock in the evening, and at 9:30 she was transferred to a private room, and I
Yeah, well,
visited her
that's
next
the
day.
way it should be. I wanted to mention something about crypto. First of all, listen to this. A plot of virtual land in the online world called Decentral Land sold this week for 2.4 million. This was in last week's paper. So somebody bought a plot of land. It's all the amazing thing, and I have a point about this too, is though that hardly any 2 points. One, hardly anybody's talking about the infrastructure bill, which has very strict regulations about crypto. And I think people next year are going to discover these regulations when they start getting 10, statements, because the regulations say that all cryptocurrency transactions have to be reported to the IRS, one, and two, you have to pay tax on it. People are going to get these statements next year. It's hardly in the news. I hardly see it anywhere. It's like it didn't happen, but it was, my understanding is it's in the infrastructure bill, and people are going to get these. This could be the last legs of crypto, because when people start noticing this and they get a statement, oh, I have to pay tax, I have to report this, I have to figure out if it was accurate or not, because there's a lot of inaccuracies. So they have to keep their basis. This could destroy crypto, and also India, by the way, is now have, as of last week, has a bill have bills proposed to either uh, heavily regulate crypto or not even allow it. So this is the trend. The governments are not going to want this to exist. Once in a while, you get like what I forgot, El Salvador, some country said, "Oh, we're going to accept it," right? But the world does not want to have an unlimited amount of money printing by private citizens and not be able to monitor it. So this is going to wait till those 1099 hits. And my last point, which I have to figure this out, but about this, but my theory is gold's been very flat for a year or two.
Yes,
And my theory is a lot of that money is going into crypto, because if crypto worked like
I
it's
agree.
supposed to in the future, although personally I agree with Paulson, it's a scarce amount of nothing. And it probably, I wouldn't be surprised if it was like Beanie Babies, and eventually they went to $1,000, and then they for a doll, and then it went back to five. So I wouldn't be surprised at all if this happens, especially once these IRS regs hit and people find out. But all that money, a lot of it could go into gold, because people might say, okay, so much for Bitcoin. I want a stable, value. I want stable values, and I'm not going to use Bitcoin anymore. So it could really pump up gold when if crypto collapses.
There
Although
must there must be a store of value, which of course gold, silver represent.
yeah,
Peter, do you expect the exodus of crypto investors in Salvador from
yeah,
US?
yeah.
It's
The El Salvador
typical countries.
like,
There's a good climate. Maybe they'll go all there, and they can live for one crypto maybe for 5 years.
yeah. Well, you're right. So the money goes far, probably, and I'm sure in a South American country, El Salvador. But
And they have
then
they
again, it may only last buy you lunch in 2 years,
that's
or it may be worth $1 million. I mean, I always say it's total. There's no fundamentals behind it. There's digital currencies coming out. The U.S. will eventually have a digital currency, but when these regs hit and people start noticing this, unless I misread, but I think it was in the infrastructure bill, and that's what I read. And so the people are not going to like this at all. It's like, oh, now it's all, you might as well. What's the advantage of Bitcoin anymore, except for it's just or any crypto, except for the fact that you're a trader. But I could trade anything, and that means people are going to make money and people are going to lose money. People could lose a lot of money in Bitcoin and other things.
so. The only way to avoid tax this is not to use crypto. Just store it like you would store gold, for example, like physical gold. If you would have the same way
Yeah.
crypto. So let's say you own say 100 bitcoins. Just keep it. Don't use it. Don't buy
Well, it could go to zero though, or it could go to $1 million. I mean, because there's no fundamentals behind it. Just like again, tulips in Holland, Beanie Babies. This has happened a number of times. You know, people can bid things up. It's like so it just looks like easy money, but somebody's at the end of this, and if it starts crashing, everybody will just be jumping out. I mean, there are people who have millions and millions and millions of dollars of this stuff. Some of them maybe didn't put anything in initially, and they'll get very nervous and say, "Okay, I'm going to cash out." If there's and the thing that may do it is these regulations, not to mention rules like India's proposing now. I mean, I think the end, again, could be worth anything. I'm not saying don't trade. I'm not saying because it could be worth anything because it's worth nothing and everything. Because it's only worth it's just sort of a trading scheme. So but the problem is, I mean, I wouldn't touch it in a million years because I'd rather own something real, that I know there's fundamentals, some fundamentals behind it, and also doesn't have every government in the world probably going to be after it eventually, or almost every government.
in some ways. It always reminds me of this old story about two men in New York. They're meeting, and one says, "I have a great deal. I just bought a container of sardines, and each can cost only 15 cents." So the guy thought about it and say, "You know what? I will buy this container from you. I'll pay you 17 cents per can." She said, "Okay, sure, it's all yours." So they agreed. And next day they meet again, and he regrets now why he paid, why he got only 17 cents. It could be much more. And he says, "You know what? I want to buy it back from you for 20 cents." He says, "Yeah, okay, sure, it's all yours." So they agreed to a deal. And the next deal already, again, back and forth, 25 cents a can. So now, when they met next day and he already got this container, he said, "I opened one can and it's horrible. You cannot eat it. What kind of sardines there are?" He says, "You're an idiot. How could you open it? It's not for eating, it's for trading."
Right, exactly. Yeah, exactly. It's not for you. It has no purpose other than digital currency. We better get to dividends because
Yes,
dividend stocks because we want to keep
that's
it
uh,
moving.
that's always pleasing. Especially, I love GDV because it pays monthly dividends on
Which
11th of each
which
month.
JGV?
GDV.
Oh, GDV. Yeah,
Yeah, Gabelli Income and Dividend Trust. Yeah,
yeah.
I like that. I think this one, if I decided to sell all the dividend stocks, that will be the last one I will sell because it's a monthly distribution.
Oh, you like the monthly distributions? Yeah,
But
yeah.
even that one, it went up, of course, in the last few months, and that one is not paying high dividends anymore. It's paying still about probably over 5%, but we used to pay 7.5, 8%.
Yeah, those ETFs, the thing is, a lot of them pay a good distribution, but uh, if you look, you can look at CEF Connect and you can see that a lot of them, it's not that they're making 5%, it's that they have a lot of appreciation. So as long as the stock market goes up, you get the
Mhm.
five. But if you look at the underlying dividend, it might be half of that or less because nobody can get five safe these days, to
Yeah,
100% safe. So either one, they use leverage, but some less than others. But it's very dangerous if they have like 30% leverage or more because if you look at like 2010, some of these almost went bankrupt, and if there's
yes.
another crash, they could lose everything with the leverage. But even with that, generally, a lot of these, if you look at their actual history, they pay because the stocks go up. I could some of them own Google and Amazon, so they make a fortune. They sell a few Amazon shares, they can keep paying a higher dividend. But you have to look at the underlying portfolio. Although I like the belly funds generally, he's a sharp guy
He is.
and very sharp man. So first of all, I reduced a bunch of things this week because I've just tightened up. I spent the last 2 weeks actually more because I see the problems, and now I'm seeing the upside. There could keep going up because there's so much cash, but it's getting to be where you say, you're not getting a very good dividend return, and the other stocks don't have any, and they're so inflated. They're above historical averages. So I sold ILPT, first of all, totally now, because again, this is risk reduction because they bought MN, another REIT that was storage, MNR, Monmouth, and Mine was actually bigger than ILPT, and they did it with leverage. And if rates start going up, that could really be hurt. I cut CPT in half to 0.5%. It's the only apartment REIT I like, but it's Southern Apartments, really solid. But now it's paying 2%, and and the thing is, right now I think rates will keep going up for the next few years, maybe a year or two at least, because of housing prices. But then 5 years, 10 years down the road, who knows? So I don't want to get stuck with that, and it's 2% doesn't excite me much. So, and again, I'm keeping 0.5%. I sold ODC and GLT, Oil Drum Corp, and Glatfelter. Glatfelter, nice profit. But there could get really hurt by input costs, because inflation can hurt the stock market in two ways. It can hurt, one, because now bonds are more competitive. So
Yes.
obviously money starts flowing out, or fear of inflation alone. But also it hurts because of the input costs. So a company like that, they could spend a lot on they could have fixed contracts, and and all of a sudden their costs are going up. So there's still probably decent companies. I'll keep an eye on them. Interestingly, I sold UBA, which I like. It's a shopping center REIT. I still love open air shopping centers. I mean, I've liked them for years. And but the thing about UBA is they own they have 6% of their revenue from CVS, and 10% of their anchor stores are CVS stores. Now, CVS just announced that they're going to cut back in the next 3 years 10% of their stores. So I'm thinking, well, what if they hit a few of their stores? As a matter of fact, the local CVS near here could be one of them, and that's it. And they're owned by UBA. So I'm going, and I've been saying this for a while. The drugstore business makes me very nervous. I wouldn't own WBA or CVS. They're getting squeezed every time I go into CVS. They're giving me $10 on for $5 a month now, but because I'm in their club. Then they give me tons of coupons and free stuff, and 50% off on the second item, whatever. So a lot of times I'll go in there, buy $20 worth of stuff for like $5 or $7, $10. It can't be a lot of profit in there. I think they're desperate to try to maintain revenue, but they're closing these stores now, which is not good sign, because a lot of times you can buy it cheaper on Amazon. And so that's going to hurt them. And what I increased, because I'm desperate for finding places for cash. First of all, this is what I'll mention first because it's simpler. Village supermarkets. I've mentioned this before.
Yes.
I was like 1/6%, a little less even, just a tiny bit, but I increased it to 1/3%. They went down a little bit, and they have a 5% dividend roughly. They're supermarkets. They own 30 ShopRites in the metropolitan area, East Coast, but they keep making more money every year. They're bringing in their own brands. They have almost no debt, almost zero. They don't increase the dividend, it seems like, but they keep growing the revenues. So eventually, it seems solid. Even to get 5% seems pretty good if it's safe. So I put a 1/3% in that. And then ADC, I went from 0.5% to 1%. That's Agree Realty. Open air shopping centers, Walmarts, AutoZones, all Home Depots, Lowe's. Something like 65% of their tenants are investment grade. The analysts have it much higher. It pays a 4% dividend now. They've increased their dividend. They're very smart. They've increased their dividend at, you ready for this, 28% annualized, according to TD for the last 5 years. And their revenue 28% annualized, and their dividend 10% a year annualized for the last 5 years. They are smart operators. They buy and sell a little bit, and they maneuver, and they're a little smaller than like a Realty Income which I don't like as much. And they don't seem to have any theaters, which I'm a little nervous about. I like their tenant mix. And with inflation, I read too that inflation can help certain REITs, and shopping center REITs are one of them, because if there's inflation, then the stores just charge more, and they make money, they continue to exist. So it's one of the sectors you might want to be in, along with staples, tech, energy, especially. And I'll mention energy too. I reduced TRP from 5% down to 0.5%. I took some decent profits, especially counting the dividends I've been getting for years. But first of all, I looked at MPLX, which is over 20%, huge dividend, easily covering it. Buying back shares is like the perfect company. I wish I could find another. I increased USAC. That's a little risky because they have a 13 or 14% dividend right now. But there's a good chance. I read the reports, and if they've been covering their dividend with the cash flow, and their report is very optimistic because they make the motors that push natural gas. So I'm
Yeah.
looking at TRP came out and said that they're reducing their dividend growth forecast for the future from 5 to 7% to 3 to 5. So I
Mhm.
wasn't thrilled with that. And I'm going, there's political risk. I still like it, but so I have 0.5% of TRP, a third of a percent of AM, a third of a percent Sun, which is gas stations. Because I still think there's a lot of money to be made in energy if you're getting, 8, 10% back, whatever, or 6% like TRP, but growing before, and who knows, but energy, natural gas and even gasoline, I don't think it'll change a lot in 10 years, in 20 or 30. So you can get a lot of cash out of these businesses. So those were the moves I made. And
Peter,
but it's tight.
quick question. Speaking about energy, um, the day when market tanked 900 points on Friday, you know that the gasoline prices went down big time.
Yeah.
However, next day, Monday, market recovered and recovering today as well. But the gasoline prices are not recovering really at all after the drop on Friday.
Oil prices aren't, you say? What
The
isn't,
gasoline prices,
I'm sorry,
they're
what isn't
still,
recovering?
the gasoline prices generally 67 now. They
Oh,
didn't
oil.
recover the oil prices.
Well, they just released 50 million barrels.
It's dropping
You know,
above it.
well, it's still, but it has an impact in the short run. But you know what? They'll use that up, and and the market doesn't really know anyway. Look, if the market knew what I think I know, then oil should be much higher in the futures because again, you have an oil industry that is not reinvesting in oil and natural gas. I think they are reinvesting, but there's continuing demand. But again, these oil companies are going, you know what? We have 10 years left, 15, 20, we're being vilified. It's like, okay, let's return some money to our shareholders, which is perfectly what they should be doing if they're running their company. If you were told, okay, you have a company, it makes a lot of money, but in 15 years or 20 years, it's endangered, you're going to stop investing quite as much. Then you're going to want higher oil prices, and you're going to say, okay, I'm not going to invest every last dollar in it. So in a world that needs more and more energy, and natural. Oh, another interesting point is that this last year, 2021, I just read something that said there was a 20 to 30% reduction in wind power uh, globally because the winds are lower. It's like,
Mhm.
okay, so you're going to run the world on wind? It's like, oh, we had a bad year. Oops, you can freeze. But in a world that needs more and more energy, in a world where large parts of the world don't even have energy and they want to heat their homes or buy a car, and people want bigger homes, people want everything, and populations keep growing. I don't see anything happening to. I think oil will be more or less flat in 10 years. Natural gas will keep increasing. So you get high dividends, and eventually it's terminal. But I keep, by the way, AM and TRP now and Sun. I put it all in an IRA, so I don't pay any taxes because I'm looking at it. Look, maybe in 15 or 20 years, these companies will be going bankrupt, but I'm going to get a lot more out of my money out of them. In the meantime, and then whatever they do, they do. But they're cash cows in the meantime. So, but I want an IRA, so I don't pay tax on it.
Wonderful. Oh, okay. We will say goodbye to our listeners for now, and we'll meet next Wednesday to
Yep.
discuss what's happening in the market. I expect a lot of things will happen in the
Yeah.
upcoming week, and hopefully we'll have to ride it all
Yes,
out.
times have changed. Times
And
have changed.
times changing, but we'll find out how to survive in this, and
Right.
not only to survive but succeed. Okay. Thank
Right.
you so much, Peter. Bye,
Bye.
everybody. It was IBM TV Modern Finance. Bye bye.
Bye.